Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody guys, today we have some new inputs on the gold market, in particular speaking on the daily chart. Take a look at this minor candle that has been formed yesterday. At first glance it looks really, well, nothing interesting, so just ordinary candle has been formed here, but this candle simultaneously is a grabber that suggests the taking out of these lows, and this is a reversal type of candle guys, because market has formed a new top but price close below the lows of the previous candle. This is important because usually, as a rule, reversal candles have continuation. So the price action could continue and should continue. Appearing of this candle in general and how market behaves on the intraday chart makes phantom chance on the reversal. Although the pattern that we have specified yesterday is not cancelled yet totally, chances exist, but on the background of these events, well, they are not really very significant. Just to remind you, yesterday we talked about the crucial vital areas for both scenarios, as for the bullish scenario, as for the bearish scenario. Speaking on the bearish scenario, price has held it perfectly. So we said if you would like to go short, you could try to take a position here with about the OP target, because if market turns down, it will turn directly right from there. Grabbers has been formed here. We said either should lead to some spike here up, just wash and rinse of the OP maybe, and then return it back down. Grabber has worked as this top slightly above, for the few pips above this top. So formally, technically, grabbers have worked perfect, but market has collapsed. So, but this action market perfectly confirms the importance of the bearish scenario. This level has held, and market collapsed immediately right from there. So it means that bearish scenario currently works. In particular, this candle has become the reversal in the bearish grabber, suggests the taking out of these lows. At this simultaneously, so if you have taken the short position, you could keep them. Those of you who haven't taken the short, but now you would like to join this party, you need to take a look at this level. So we said that alternatively, if you are not ready to risk for taking the short around this level, you could consider the failure of this construction. So if market starts dropping below the 1730, it tells you that something goes wrong with the bullish context and market is preparing for the taking of these lows. So here you could consider taking using the stop sell order below this level. Alternatively, conversely, for the bulls, market has hit the vital area for the bulls. And we talked about yesterday, we haven't pointed this ABCD pattern, if you remember, but it has changed the shape a bit because, well, as you can see, market has taken out of the C point by this upward action. So actually, this is not perfect extension because C point stands slightly above the A. But when we calculate the support areas, it makes sense to use. And you can see market precisely has hit the XOP target. It's just pips to pips, 17 area approximately. That perfectly corresponds to the lows of the previous shoulder. This is the point where you have to make the decision whether you would like to go against the daily patterns. Are you sure that you would like to take the long position on the gold and you believe that the market will reverse up and start to rally up from here? Because this point provides you best risk-reward combination, because your risk will be slightly below this area. If market will collapse below it and start dropping, the bullish context will fail. So I call this kind of areas as the culmination points. They do not guarantee you that you definitely will success in this trade, but they provide the best risk-reward combination and minimal potential risk for your trade. This is the point where your risk on the trade, your potential loss on your trade will be minimal. That's the attractiveness of the culmination points. But whether you would like to trade it or not, that's just about you. So because As you can see, this pattern has not failed yet. But what I do not like here is the fast action on the right arm. Here is a normal, because this here is bears are controlling the market. But here it's not normal, because the bulls should control the market. And too fast drop here, well, it's negative sign. Deep retracement not the problem, because here market is forming bullish reversal swing. You can see this upward action is greater than the previous swing down. Deep retracement is normal, but I do not like the acceleration. At the same time, you can't definitely say that this pattern will fail. So another way how you could act, for example, you could not try to catch the falling knife and trying to catch the bottom and gambling whether this, well, my market will drop lower and will not drop lower, what to do. You just could wait and see what will happen. So, for example, if market will form the bottom, starting right upward action, you could try to take the position on the minor retracement with the stops below the bottom when the upward action is already will start. Here, for example, maybe minor hand shoulders will be formed as the bottom area, and market will start upward action. So currently, market still keeps bullish scenario well. It has not been erased yet totally, because this level is still valid. But how to act in this situation? Well, you will have to make the decision on that, or just forget about it, miss this trade, deny this trade because of the too much risk due to the pattern that we have on the daily chart, because this actually suggests the taking out of these lows, and that totally erased the context on the hourly chart that we have. Well, that's the life of the trader. So every time you have to make the difficult decisions, whether you would like to trade it or not. But in general, I would say that the daily patterns are stronger than intraday patterns, because they're just the patterns of the higher scale. In the current circumstances, well, until you will get the good reversal context, good reversal shape, maybe some reversal pattern, it would be better to not trying to take the blind at the position just because we're at some support area.